Welcome to Langton Academic Solution. So we are still looking at financial statements, and this is our last part before we look at the practical questions, end of year adjustments. And specifically now we are looking at provision for bad debts and its treatment in the financial statements. Provision for bad debts. What is the provision for bad debts? This is the amount of money you put aside to cater for those people that you think may not pay. People borrow in a business and for some reason or one or two reasons they don't pay. For example, someone may borrow and die, and that person died. So he flies abroad. So what do you do for that money? So that's why you put for provision for that bad debts, to cater for the bad debtors, people who borrow and they fail to pay. Even another may deliberately fail to pay. So another may run away. So that's what we call provision for bad debts. But mainly, we are looking at how to treat provision for bad debts. In accounting, the first time provision, if you are treating provision for bad debts for the first time, is always an expense. First time provision, remember you are removing money and you are catering for the bad debts, it is an expense. Then the subsequent provisions, and this is the common ones, we always have either an increase in the provision for bad debts. It is also an expense. Increase in provision for bad debts is also an expense, and a decrease in the provision for bad debts for it is an income. So we are going to, let's take a simple example to bring this thing out. Assuming this is our simple trial balance, to illustrate these things. So we have details. We have the debit side in shilling and the credit side in shilling. So details, we have, maybe we have debtors of 200,000. We have cash, just in case for formalities, of maybe 100,000. We have provision for bad debts. We have provision for bad debts of 2,000, and we have payables of 6,000. So maybe any motor vehicle, any of 4 million. So assuming that's our simple trial balance, then at the end of the year, the additional statement, adjust provision for bad debts at 10%. Adjust provision for bad debts at 10%. Adjust provision for bad debts at 10%. So this is the question. We are looking at how we are going to treat it in the income statement and in the balance sheet. So each time they tell you adjust provision for bad debts at any given percentage, think about of the debtors or the receivables. Provision of bad debts is adjusted with the receivables. Sometimes they will tell you at 10% of receivables. Sometimes the question will not tell you, but even when it has not told you, always adjust it with account receivables. So look at my provision for bad debts in the income statement. It is it is 2,000. My provision for bad debts is 2,000. Let me make it 20,000 to make more sense. To make more sense, let me make it 1,000. Then let me make provision for bad debts as 10,000 such that it can make some sense. Then I adjust the 10%. So the old provision for bad debts is 10,000 from the 12 balance. Now we are calculating the new provision. They have said adjust at 20%, and I've told you each time they take adjust, think of the receivables. This is 10% times 200,000 times 200,000. So this, so we shall end up getting 20,000. So look here, the old provision is 10,000, the new provision is 20,000. So you look, is there an increase or a decrease? And from what we are seeing an increase, 10 and 20, an increase of 10,000. So this increase, it goes in the income statement as an expense. So if I calculate it, goes in the income statement as the difference, the increase, it goes in the income statement as an expense. Then in the balance sheet, you always take the new provision for bad debts, whether that increase, whether an increase or a decrease. But if this value, assuming now, that is example 1, then let me add the statement number. To adjust provision for bad debts at 5%. Adjust provision for bad debts, let's say at 2%. So others remaining constant. So when you look at my old provision, is still 10,000. Now this time round it is 2%, so you get 2 over 100 times the account, the debtors, or account receivables, 200. So you cancel. So therefore you end up getting 4,000. This time round the old is 10,000 and the new one is 4,000. Which value now there is a decrease of how much? Of 6,000. By getting 10,000 minus 4,000. So this difference of 6,000 in the income statement we treat it as an income, and in the balance sheet we go with the new value of 4,000. It's what we base on the debtors in the balance sheet, less on the debtors or the account receivables. We shall look at it more. Then some scenarios, the question comes and says, assuming they had said increase provision for bad debts, increase provision for bad debts by increase provision for bad debts by 2,000. Just in case they say increase provision for bad debts by 2,000, you come, you get the old provision. So this increase, take it straight as an expense in the income statement. Then the new product will go in the balance sheet. Get the old provision of 10,000 plus the 2,000. So this is the value that shall go in the balance sheet, the 12,000. Just in case the question has said increase provision for bad debts by 2,000. If it was decreased provision for bad debts by maybe 1,000, this same value it goes to the income statement as an income. And in a balance sheet, we shall have 9,000 because we shall reduce as our new value. The last scenarios, provision for budgets should be adjusted to, let's say 15,000. If they say it should be adjusted to 15,000, meaning they have given you the new value, find the difference, and which is 5,000, and you know the difference is an increase. So this is the one that goes in the balance sheet, the 5,000 goes in the income statement as an expense. But if it was maybe adjusted to 7,000, still find the difference, the new value 7,000 goes in the balance sheet, the 3,000 goes in the income statement as an income. So in all these scenarios, we are mainly looking for the summed up by increase expense and decrease income. So this has brought us to an end of the income statement and the balance sheet. So the last part we shall look at the practical question. Don't ask questions by numbers are here. So for Chambogo students, we are always in Banda near Pride Shop. May the Almighty God bless you.